Welcome to Take a Stock. It is Tuesday, the 31st of August. No, it's October, actually.
October.
2023. It's Halloween, by the way. Halloween. I tell you, there's nothing more scary than being a small cap, micro cap, nano cap investor in these markets. The AIM All share. In fact, the AIM All share is trying to do something, I think. It's trying to make a move, Johnny boy.
Is it now?
Yeah, well, do you know what? It's 3 days it's been up for. Look at that there. So listen, it's up 0.14%. Let's not get too carried away. FTSE's up the half of 1%. FTSE 250 looking good. Up nearly 1% there. Well, 0.8. Rolls Royce powering away there with its engines at the top, the leaderboard. Smith and Edwards, what a fall. BP, yes, BP coming results out today. Ocado, hey. By the way, so this is quite scary. We're talking about, is a house price crash imminent? Now, before we get into this, if you're watching this for the first time, please hit that subscribe button, and we'll continue doing this. The more subscribers we get, the more likely we are to continue doing this. And hit the like button, share it with as many people as you can, and don't forget, if you haven't tried the Vox Markets app, it's free to download, but it is an excellent resource. I'd highly recommend. Not just because I work with Vox, but because it is the best app out there. If it went, I don't know where I'd find my RNSs. Anyway, house markets. Right? What's your thoughts on the housing market, Johnny?
I think it's going to ebb away for a bit.
Ebb away. What does that mean? What do you mean ebb away?
I think prices will ebb away, lower. When you talk about a crash, you kind of have this idea that everything's just going to plummet.
Yeah,
all at once, and I don't think that's how it works, particularly not in the housing market. I think you'll just see a slow ebbing of confidence, and that's
death by 1,000 cuts.
Death by 1,000 cuts, exactly.
that's something to look forward to.
Yeah, well, it's already begun. What you've got to remember is that the housing market continued to do, certainly house prices even continue to do very well. Up until not that long ago. Up until about a year ago, and you're starting to see decline. So house price growth is starting to turn negative, but from a peak. So a year ago we were still seeing prices rising.
Yeah,
I think that's where we are now. We're going to sort of mortgage. It cannot deny the gravity of rising interest rates, unfortunately.
Yeah, exactly. I mean, look at this chart here, right? I mean, in fact, those figures are yesterday. Mortgage approvals were down 32.5%. The worrying thing, net approvals for remortgaging fell 57.9%. That's the worst since January 1999.
Yeah.
Now, when you hit historical figures at that, that's quite worrying. Even in the US, like I said, new mortgage applications, 1995 low. And according to the latest data from Nationwide, the average, this is in September, we have new data out tomorrow, but UK house prices fell by 5.3% in the year. Look at this. This is a chart of house price growth. Now, it's growth. Okay,
that's the point.
Yeah, so you can see here back in 2007, just before the great financial crash, the growth was 10%. This is price growth. It went down to almost minus 17%. So that's when the banks are going through. That's how much prices came off, but it was from a high. The growth went down. Now, look where we are now. We are around about minus 5%, just below that. And it hasn't been down here since literally, the great financial crash. But like you say, this is growth. So a froth is coming off the market. My thoughts is this. Will there be a house price crash? No. Full stop. I mean, there'll be, be some bargains. We are a nation of wannabe homeowners. There's always buyers out there. The one thing that's suppressing that, like you say, is interest rates, and that's an issue. But I don't think there'd be any sharp fall off. I think there'd be some bargains. Not bargains, but you can buy a house at some good rates if you get a mortgage.
Zoopla had some numbers out today or yesterday even. There are transactions, but they tend to be cash buyers. So great market conditions if you're a cash buyer. It doesn't have to worry about getting a mortgage or mortgage rates, rising interest rates. So, I mean, the market is tough. One of the things we are seeing is a fall in transaction volume. So, that really is going low. But property is very illiquid. So it's not like a stock market where the daily buys and sells are reflected in that price and it's moving all the time.
Yeah, well, that's the
You know, if
problem
you
with
don't
There's
have
too much liquidity, and some
Yeah.
shops people just buy when it drops down. If you had a whole lot, it's a good thing. It's like I mean, Buffett once said, if you had to buy sort of a handful of shares, you had to keep them for the rest of your life. You spend more time, researching them, buying them, all that stuff.
But the point is, if
anyway,
you don't have transactions, then you don't really have any price discovery. So and if sellers don't think that they can get the price that they want, then they're just not going to sell. And it's more a case of staying put. But then rents have gone up, and first time buyers are desperate to not be subjected to really high rents. So we are seeing some recovery in that end of the market as well.
Yeah, that's the AIM share. Look at this. If you zoom in, 3 days in a row it's been up for. Wow. All right. Let's have a look at one of the house builders. Taylor Wimpey is one of the better sort of, I mean, that, like I said, if you look at that, that's an obvious, it's not gone below this low back here. And they are a couple of higher lows there. It is in a range, but it's not making any higher highs because it hasn't got above this level. But I think Persimmon they've got a bit, I think a bit more debt, less the margins aren't as good. But they did hit a recent new low down here. They're very similar. The big house is very similar. There are some better ones. I think Taylor Wimpey is one of the best, as in margins and having no debt and all that stuff.
Yeah,
in fact, if anyone can help me out, make a comment. What do you think on house prices? Is it going to be a crash? Please comment. And also, could you do me a favor and do some research for me? There was a stat out saying the amount of people without mortgage surpassed those with a mortgage. I don't know what the actual numbers are, percentages. I think it's like, I don't remember. It's more people without a mortgage. If you could find that stat, that'd be quite good. If you could, But I don't. There's never been a real. Like I said, even when the banks were going through, or there's worry about banking, banks actually going bust. House price growth only went down by 17%, and that's growth.
Only
but that's from a high. So literally, if you look where we are now, where's it by? Look at that peak up there. It was at 15%. So literally, it's what, take the -5 off, you get 10% still growth so it's not that worrying, is it? Really. I mean, the worrying thing is, I suppose, like we said before, building. It feeds into lots of other industries. That's the worry. And I think, if that slows down and buying slows down, people are just not doing DIY, like I said, remortgaging. A lot of that, sometimes people do that for like extensions and all that stuff and home improvements. That slows down. And so it's just a little bit of worry in it. The house prices, interest rates.
We've already seen, some pretty horrible reports from the building trade, the materials trade.
Yeah.
Travis Perkins, Wicks, etc. So it's tough, but probably now priced in, you would imagine.
Yeah, a lot of it is. But do you know what? I honestly think there won't be a rate hike this week by the Bank of England or the Fed.
I don't think they will. No.
I think, they're suggesting interest rates will be coming down back end of 2024. Now, what does the market do? It tries to pricing as far ahead as it can. So I genuinely think there'll be a standard bounce. Whether that'll translate into a larger rally into 2024, I don't know. But I do think we'll start to rally in 2024 because when you got that, the decision by central banks to going to reduce interest rates, the market will start to price that in. Like I said, the worst time for the markets are 6 to 12 months before a recession. And we've seen that. We haven't had massive falls of late. The worst falls 6 months ago. So I think it'll start to price in that correction and start to rally ahead of central banks. Because I think, economics, we look at it today, in fact, figures out, about insolvencies and all that. It's getting worse.
Begbies.
It's getting worse. Yeah, Begbies Traynor. In fact, let's go right now. Begbies Traynor, scroll down here.
Yeah.
And there we go. Firms going bust, on track for the worst year since 2009. We've got these years ringing with us. Again, 2009, we're going back to that level. The number of companies going bust this year is on track for the highest since then. Insolvencies rose 10% from a year ago in the 3 months to the end of September. The latest official figures show sharp rise in number of firms at risk of going bust as well. So firms in critical financial distress jumped 25% in the last 3 months. Insolvency expert Begbies Traynor says they are defined as having a county court judgments exceeding £5,000 against them. Now, this is what the Bank of England have done. They are there's lots of companies that literally took on debt in when it was cheap to take on debt, and now are struggling. You've also got the cost of living rise, and people spending less, so that they're being bitten from both ends. If this continues to happen, everything will roll over. Inflation roll over. Everything will roll over.
Well, that seems to be what's happening.
The door, is it, John?
No,
your door
my telephone.
Oh,
that does seem to be what's happening. The economic activity slowing down markedly is obviously helping to bring inflation down quite substantially. So just going back to Begbies' red flag report. I mean, and bringing it round to what we're talking about with the housing market. The sector that is of most concern to them is construction, real estate, and property services. Critical financial distress levels in those sectors are 46% and 38% up on the second quarter. So unsurprising, particularly where it relates to house building. Lots of businesses support those industries. So it is nasty, and actually, if businesses fail, this is where we start to see unemployment rise, and this actually could have an impact on the housing market more substantially. There's a view that people are not remortgaging because they actually don't want to. They're worried they wouldn't pass affordability checks at the moment.
Wow.
Okay. I mean, I say I wouldn't expect a crash, but I don't expect it to be. I don't expect recovery in the housing market and the housing construction market for any time soon.
Yeah, and also, when you're thinking of, the markets may rise, or the tide may rise altogether and push a lot of companies up. But remember, if they start reducing interest rates, then companies have been suffering because of high interest rates won't suddenly overnight get better. Like it'll still take but a year or so to reduce those rates, unless there's a major crash in the economy and Bank of England just really drop them down. It'll take a long time to bring those interest rates back. So any company suffering will continue to suffer for a while. So it's still worth going with healthy companies. But saying that, some massively oversold.
100%. Avoid overly indebted companies at all costs at the moment. Avoid companies with poor capital structures. Or where the refinancing risk is very, very high. The need for refinancing is very, very high.
I've never understood Begbies Traynor, right? Yeah, go on.
Well, Begbies Traynor, it's an insolvency practitioner. So
no, I know, but I've never understood share price. I thought it'd be contrarian, but it's not. It seems to have rallied when the markets have rallied, and now, where we are now, the struggling is literally it's never. Look at that. It's struggled at 150. Come off. It didn't manage to do that. 5-6 times. And now it's back down to 115. And I once did I ever get into them? I was seriously considering getting into them once. But I thought they don't really rally in. They're not a contrarian play.
No, I agree with that. I find that quite strange because I looked at these and thought, probably some time ago, again when we were doing our stock screen podcast, and Begbies popped up. It's never been a very expensive share, and I did think the market conditions are such that. Here is a company that will stand to benefit from a period of economic weakness. But as you say, when I look back, turning, being in the right place never seems to translate into to particularly significant share price growth at those times. It's an odd one. I agree, and so therefore I didn't buy it.
Let's get through some comments here. GB62, prices are only correcting down, just like the AIM has been doing. That's been a lot more painful. AIM's down 48%. Like I said, that's including the winners.
It's a correction. It's a correction. So if you do want to, if you do want to make a prediction about where house prices should be, it's that they are inflated. They are unaffordable.
Yeah, they were.
The price to income ratio is off the chart. Compared to where it has been historically.
Yeah, and when you get people, in to sell, when people start literally buying houses without seeing them because they're scared someone will nick them off. That's housing bubble. It happens every 1 or 3, 10 years, pretty much.
The Zoopla stats suggest that the house price falls are greatest where there has been where that affordability has been stretched the most, i.e. London, for example.
Yeah, it's the rental market that is bonkers. Lemon Physical. Hi, chaps. Thoughts on Wincanton? Despite the share price crashing earlier in the year due to a contract lines, the latest trading update was reassuring. Have you looked at Wincanton?
I've not looked at it.
A fundamentally good business. Thoughts on the chart, Justin? Wincanton.
Wincanton logistics.
Okay.
Logistics.
Let's look at Wincanton.
I would look at it. My machine just decided to become non-responsive.
when you see gaps at that, it's not a gap down, gap up. So I assume those are the results there. 7th of March was probably the last trading update, was it? So let's look at the Wincanton. Yeah. So I think a trading update. When was the trading update? Yesterday. So they say there. Trading in line with market expectations. Group published 9th of November. So remind us again. We're looking at then the interim results, but essentially go back to March. That's what I assume was that last pre-close trading update. That's the gap down, was it there? Because but at the moment it says bounce. Nice. What you're looking for is lower highs, higher highs, higher lows, higher highs.
Yeah,
and that is got it there, and it's a nice gap up there, which suggests back in September they maybe will have more of a bullish update. So, but I like to see now breaking that 280 level.
You would expect this to be there. You would expect this to be very, very correlated to petrol, diesel prices, obviously. Shifting stuff around is inexpensive and low margin business. Yeah. So when costs go up, margins that are already thin become even thinner, and you saw that in last year's numbers. Pre-tax profits were down quite substantially. So this year you arguably has the tailwind of lower fuel prices, but that's not a given. And in fact, those the fact that lower fuel prices are exactly what we've seen in BP today. That's why the shares are down a little bit, because it's not making as much money as it was a year ago.
Yeah, let's look at comment here. Michael, we still need more houses built, or oldies need to force to downsize. Oi, come on, love. You imagine going to an little old lady's house. You got 5 bedrooms here, love. Come on, out you get into 1-bedroom flat, granny flat. Come on. We still builders need to build more bungalows. Agreed on it. No crash, minor correction.
That is true.
We've always need to build more houses. We never have. We never hit the target ever.
You actually do need to build more bungalows. I mean, I've been thinking this for a while. I mean, it's very strange. You go to.
Well, you've been thinking about it for a while.
I have, because I like bungalows. But no, I was thinking about the sort of demographics of the UK and where it's going, and what sort of housing stock we need. And actually, as you have an aging population, you basically need houses without stairs. And bungalows are incredibly expensive. They are very sought after for exactly that reason. And they don't tend to build any more of them because it's not especially, you can't get as much square footage out of a bungalow for the obvious reason it only has 1 floor. So
I like the idea of bungalows. Living with you must be a sexy rock and roll life. You wake up in the middle of the night thinking, sit up in bed quickly. We need to build more bungalows.
I'm not getting any younger. This is that's the
only exercise I get these days.
It's important. It's important, and again, you could look at that as a failure of the housing construction market in the UK, that it's not building the types of properties that people need.
This is the
main issue I have with it.
Britain's biggest bungalow builder. That's who we need to be.
Seriously, what you're doing, it'd be a good business.
That's BP. Look at the chart of BP there. Look at that, exactly. Another nice set of higher lows, and higher highs there, and it's had a little rollover today. And you can see there, first time it sort of broke that, and you can see,
so the numbers
just got a lower high there as well. Look,
the numbers were just
trend there. Yeah,
a little soft.
Yeah. Okay. I think they'll be okay. Let's look at the front page here of Vox. I'll go through some more comments in a bit. Please, by all means, get your comments in. We'll get through as many as possible. Most followed companies, Arc Minerals. We talked, of course, they've done a deal recently with Anglo American. I can't think who it was now. Agreement with Anglo American. Has the chart reacted on that at all? Let's have a look at ARCM. No, it hasn't really. It's in a range. I don't know if there's a seller in there or whatever, but it hasn't really reacted on that. Second most followed. Oh, one of my stocks, Good Energy, John. They're going to be ticked out for a massive premium. Tumbler of cash in right here. Vast, third most followed, down 10% today. They've released also most.
Do you know what? That's improved throughout the day, actually.
Well, yeah, it was down a bit more than that. The production is going up. Financing wise, they seem to be getting to it, but
it's got a lot of value there that it's extracting, for the future. Here we go. This is what I was talking about, financing risk.
This is it. You've got to be aware of this. It's going to continue to happen in a high, cost of money, cost of labour, cost of capital, everything costs more these days. This is going to happen. So they announced here that this Velocys down 68%. And the long stop date for convertibles was today. And they said they had to meet certain criteria, which has not been satisfied. So they haven't got the funding there somewhere. So they're in the kind of in these discussions. They're talking about things.
Yeah, there's
there we are. Funding will be required before the end of this calendar year, and therefore the board is prudently exploring near-term funding options as discussions with the strategic investors continue. Further updates. That's never good in this environment.
Yeah, the clock is ticking.
And you're against the ropes. You know, when you've got a deadline at that. If you go back a couple of years back, they wouldn't have had any problems raising money. That's the environment we're in. You know, if you're in a company that's loss making, the first thing you should look at, how much cash they got. Do they have enough cash to get to the next sort of significant value generation milestone or to profitability? And if they don't, they can come unstuck. And similar to that. Another big fall today, actually, they've just relisted HeiQ. I remember interviewing these on their IPO, especially materials. But they've come out today, released their interims and yesterday. Final results, restoration, but they've filed this restoration today after these results. And the results are not good reading, actually.
Then
even the interims, there's a late set to the 30th of December. The revenue dropped 26%. Their operating loss of 6 million, and literally cash 7.3. So that was back, when was that, in December? And they haven't raised any money.
No,
so,
June.
Okay.
That was at the end of June. That cash balance
for June. So that June they had that much cash. Where are we now? We're October, November tomorrow. So that's 6 months on. If you break that down in the monthly cash burn, realize how much they got left. You think, okay. All right.
Again, seems like a ticking clock there. That's it's not helpful.
What's going up on positive funding news? Like, I don't see. It's really odd. I don't know if you read this. Utopia, innovative funding model. So essentially, this was, remember, the company yesterday that Prospex Energy said they're not going to do a project with them now because Prospex Energy was suffering from lack of funds and they couldn't spread the resources too thinly. But they now intended to raise money is the intended acquisition of a direct stake in Orid Organics, the UK holding company of North Macedonian medical cannabis producer, provides you with potential innovative source of funding. So I don't know why they're doing this through cash flow from that company. I don't know how. To me, I just rallied like 50%.
I think we might be seeing a few more of these innovative financing approaches.
Innovative. Yeah, it's Well, let's look at the HUI chart. HUI. Let's look. HUI. Oh, there we are. There we are. It's coming down from there up to there. So I don't know if it's. I think it's just a relief bounce, isn't it? That they're thinking, wow, they need cash. They're going to be okay-ish. I think that's what's happening here. So yeah, real good food. You ever look at this? It's like they were hammered. Okay, they're down to like sub a million market cap. But they come out with a trading statement today saying things are looking better actually, and they're going from like significant turnaround in full year with EBITDA in the range of 1 million from a 5.8 million loss, with an exit run of 3 million to 4 million EBITDA. So they're going to do, trading updates can always be bullish. They don't show warts and all, do they? They can always pick. It's the highlights really of a financial report, the trading updates, and so they leave out. It's like when you're going back to buying a house. When you look at a house and you're on Rightmove, on the market or Zoopla, it's the stuff they leave out. That you don't see. Everything else looks nice. Then all of a sudden you think, I like that house. Let's go see it. And on the way they go to see the house, he goes, what was the garden like? They said, didn't have any pictures of the garden, didn't they? And you get there and there's no garden. Right, I want to. It's what they leave out. Trading updates are what they leave out.
It's when they don't have a picture of the front of the house that I tend to.
Yes, that's a worry. That's a massive red flag. Hang on, let's see the front of the house, and it's like cladding or something like that, and it's got a picture of some kind of person on there. Okay, so what are we looking at on the front page? We'll go through some of
Atlantic Lithium. But really, this is going through a lot of things that we know have already happened. I believe that you're going to be speaking to Neil.
Yeah, I will be speaking to Neil. Apparently, he's busy, but I'll have a chat with him. But oddly, it's like, look at that. I mean, I said previously, it needs to get above that level there, pretty much previous highs. It didn't. It did running that all day. I mean, when I say get above it, I mean close above it. That there zoomed up to 30 pence, came back down, closed below it. which is not good. You want to get it back above that. But saying that, we are sort of now down back at this sort of level, which may be a bit of support at 20 pence, 19 pence.
Yeah, it's a strange chart. I mean, they've made enormous amounts of progress this year. They've got their mining lease. They've got the funding sorted. They've the drilling results continue to be positive. There's money coming in from the Ghanaian government. It's a relative supportive mining regime there. So the more progress they've made, the less interest there's been from shareholders. I'm puzzled by it.
I just think, I mean, I don't know what it. I mean, there's sentiment towards resource down because even today, Chinese. Let's get this up here. Investing. Do you see the Chinese .com? The Chinese figures. They weren't that good today, and they're below estimates. Scroll down. Oh, sorry, my screen's in the way of my thing. Economic character here. All right, let me just scroll down. Share screen. There we are. CPI data. Sorry, PMI, Purchasing Manager Index. So listen, that's what they expect to come in. Was slightly in expansion above 50, and they came in below that. 49 manufacturing. Of course, they're a huge manufacturing country, and so that's not good. It's not bullish. It's gone down from last month. So
well, I mean that to me, manufacturing in China, obviously, some of that will be for Chinese consumption, but the rest of it is for global consumption. So it does sort of have a recessionary air about it, in terms of the broader impact of a Chinese slowdown manufacturing. That said, a lot of manufacturing is moving. So China will continue to be an important manufacturer, but there's a lot of manufacturing now going into to other countries. Vietnam has some very decent data out today. Yesterday.
Oh, did they? So Maddox is saying Bioventix, good company, went down because of Michael things short. I don't think it's Michael. He's not that big a trader. It'll just be because you find results and trading updates are liquidity events for people, and so they will choose to exit on those dates. They know they can get liquidity. That's all.
I mean, Michael's point. I know Michael very well. His point was that these shares are, on the face of it, not that cheap. So I can't remember what the forecast P is, but you've got to be in the region of 20, 25 plus. I can tell you what it is if I have a quick peek. 22 times forecast earnings. And Michael's point, which is a fair one, is that actually profit growth is kind of half that level. So you're asking a fairly punchy valuation for a fairly pedestrian rate of growth.
I mean, it's not cheap, and in this environment, you've got to have growth and value. In bull markets, you can have a diverged growth, no value is fine.
But it's a great company, and the thing is, it sometimes you've got to cough up for great companies, even if the growth is a bit pedestrian. The growth will come. They've got some interesting things coming through the pipeline. The Alzheimer's testing is very, very, very important. I think sometimes good companies do cost a little bit more than Bioventix has performed steadily year after year after year after year after year. And it has what you would call an economic moat. So the thesis is a valuation one, but I'm not convinced that it's a sort of valuation led company, if that makes sense.
Yeah, I know, but do you know what? In bear markets where it's tough outlook and all that stuff, you can have, the companies, like I said, in bull markets, it doesn't matter. If you've got growth, you can fly, and people don't pay too much attention to value. But also in a downturn, people look at both, thinking, okay, people just. They're more analytic in bear markets. They take more time. They spend more time. There's more worry out there. So you learn a lot more in the bear market than the bull market. Literally, when the bull market starts, you may as well sit on, apart from maybe, dividend paying funds or in money market funds. For a lot of the time, you can just sit on cash in these markets because the tide is against you. It's literally. Anyway,
I'm just going to, you know what? Just before we move on from Bioventix, I do want to point out, I'm just going back to 2016, which is the sort of in view financials that I have. It's increased its turnover every year since 2016. It's increased its pre-tax profits in every year except one, which was 2021, which was obviously a bit of a funny old year. After a big jump the year before. So, this is a proper steady performer. Yeah,
I would say that was not that bad. It's come back up. If you look at this range there, that sort of trend line. It bounced down and came out. That's not too bad. It's like throwing a cork in the water. You know, it won't stay down too long. It's bounced back up. So someone's buying back up. Someone's buying it. Someone's taking advantage of the dip. So I wouldn't worry about it too much.
And forecast growth for next year. Forecast growth for next year. Just at the pre-tax there was 22%, which is in line with the forecast PE. So you know, you almost you're looking at PEG of, you know, what, 1 or just above 1 there. So not PEG price to earnings growth ratio. I'm not convinced by that thesis.
No, but look, I mean, as I'm saying, like cork in water there. It went down massively down, you know, 34.40. But it's come back up now, 37.40. So there's a buyer there somewhere. There's someone buying. It's, you know, I wouldn't worry about the
not surprised.
There's not a bigger movement there. Just on some comments here. Emmy says, I bought a, let's just say, dog poo persimmon house once and paid for it and their shoddy workmanship for many years later. They were actually, you know, ad for that one. There's a lot of headlines created about Persimmon. They've said they've improved the quality now of their houses, and they've actually released quite a lot of information on that. But I mean, he said I wouldn't touch their shares with your magic wand, Justin. That's Persimmon. You can. I
think this was a huge problem.
Yeah, go on.
Huge problem for that sector. You know, not all house builders were building, you know, quite as badly as others, but it was a huge problem, and I just think the model is weird. If you go around, you know, sort of a lot of new build estates, they are just trying to cram as many properties into as small a space as possible. Well, that's how they make money. And it's just as I say, I think you've got an industry that's been building the kind of houses that people don't really need, that the nation doesn't really need, and making too much money out of it with the backing of the government. So I don't like that sector.
Yeah, get to the stage where you'll be showing a new house. You'll be showing a new house, and there'll be a family upstairs. No, you're sharing with a family upstairs. Yes, this is a new house. Yes.
I mean, there's been the whole leasehold scandal as well, which obviously is being addressed at the moment. You know.
Yeah. Oh, yeah. But again, if you look at Persimmon, it's the worst performing stock. I mean, even Gleeson, that smaller stock, but like I said, it's bounced off these lows here back in January, and it hasn't, revisited those. So yeah. By the way, what was it? Someone just said here from Google. The build costs increased by 8.6% over the last year, and a forecast to increase by 17% over the next 5 years to Q1 2028. Wow, really? I thought prices were coming down.
No. I see that. Sorry, over 5 years. So yeah, that's sort of compounded inflation over 5 years. So the annual rate of inflation will be falling, but inflation is ever present.
I'm glad you're here, John. I got that wrong there. Leasehold's been abolished. New lease is going to be 995 years. Got to be good for housing market. Yes, lease on new houses has been abolished by short-term property before word. Buy a short lease property before word gets out. Okay, hey, nice one. Banandi Man. I'll bring a few new homes to market, but those homes are still going to be very expensive. Yeah,
that's the problem.
Townhouses are where the profits are. Thoughts on S4, please. Okay.
S4. We have talked about. I mean, just marketing is in it. It's a right old mess at the moment. The marketing industry.
S4. And literally, the thing is, when you get to sort of, almost like one of these cult leaders, well, not a cult leader, but a man who's
a cult leader.
Well, he's not a cult leader.
But when you have a guy, I don't think he's ever been called a cult leader.
maybe I mispronounced it. No, but what I'm saying, when you get a man who's done very well, very successful, like WPP, St Martin Sorrel, right, and he goes to another, engine, and it happens, literally when there's cheap money, and he takes on lots of debt, and says, we'll do well, and all of a sudden, look at that. It's gone from like 849, debt kicks in, the advertising market slows down. That there, hang on a sec. No, that there is literally, I'd say it needs to get above.
The problem you have with, buy and build strategies are great, and that's how that was always his intention. Buy and build strategy. Why not? He didn't see the inflationary crisis and interest rate regime changing in the way that it has. So. It kind of has just neutered the entire strategy.
Yeah,
which is why we're seeing what we're seeing now. Debt is high, but also my view of very acquisitive companies it's really very hard to work out what's really going on under the bonnet in terms of the actual levels of growth. You can hide all manner of ills within a very acquisitive group within those accounts. So yeah, I think you got double whammy of nervousness around that, and of course the ad market has been incredibly weak, and we saw that in some of the numbers from the big tech guys. And they dominate those markets.
Google advertising up 10%. So
up 10%.
Yeah, Google advertising up 10% quarter on quarter from year to year. So it is stabilizing, they're saying, the advertising markets. But of course, it's not growing. Well, only Google's is growing, but I mean, it's stabilizing this apparently ad market. Facebook's ad did quite well apparently, but I think.
But they haven't been. Though. There's been a long period where even they have seen a weak ad market.
Oh yeah, and they're going to have to cut their cloth now because, of course, they've got high cost of debt there, and the top line is not growing, so it's a bit of worrying for them. But yeah, I think there's better plays in that area. To be honest, what else? Anything else on the front page? So
a few bits and bobs and stuff that I'm still working on. We've had a busy morning. I didn't.
Oh yeah, we've done really good food. Yeah.
What else was I?
Scancell. What's that about?
Scancell is immunotherapies. Really, really good science behind this company. Got money, money to last a couple of years. One to keep an eye on. I don't know what seems to be under the radar. We get a lot of attention.
Operating loss 12 months was 11.9, and the cash balance of 19. So they should have the runway to early 2025. That's what you want to see. So if you're making a loss, you're over a year of runway. Much, to get past these difficult capital markets.
There's some serious money behind this company as well. There's some serious investors behind it. I mentioned it before.
Like funny money.
No, Volpes, remember? We've talked about. I can't remember. It was one of them is Protein. There was another company that popped up in the shareholder race the other day. I can't remember what it is.
Talking about we've talked about this company quite a few times. I looked into it a little bit more and I had a chat with thing, but Stereo-Wave. This is these of lights and to kill sort of antimicrobial resistance in the nose and stuff. I mean, this is rising, but they're not in phase 3 yet, and they're not funded for that. And they seem to be based in Canada, but wanting to go into America. But it's very interesting technology. But be aware if you go back to their interim results here, they do say on the funding. There we are. The pursuit of non-dilutive. Where is it? Fundraising. They're going to need fundraising. We're confident of plans to raise capital for phase 3 clinical trials. So just be aware of that because they will need to raise money for them. I mean, phase 3s are hugely costly, phase 3 trials. And that's why the traditional model is to partner up with a bigger farm with deeper pockets. That's what Destiny Farm have done on one of their assets. And they're going for that on the second asset as well, too.
But it is getting easier in a way. When I say easier, I mean, and cheaper because, technology is moving on a pace to support the drug discovery industry. We see it with PBEG, for example, the use of AI to really sort of, expedite the drug discovery process to make sure that, you're researching the right things and to give yourself as a drug developer a greater chance of success and things like the human challenge trials, the HVivo approach as well.
Yeah.
We're seeing, the reason it's doing so well is because, like big pharma biotech, what they want to make sure that they don't waste their money on trials that aren't gonna be successful.
In the end, AI will solve everything, John. Even building bungalows. Literally, they literally have a million computational outputs on a certain drug on a certain human with a certain DNA. And literally, it'll say that the probability of being safe and efficacious on that individual, like 70%, and that's perfect on the next trial. And then you get test it in a real human, and they'll die. Oh, hang on. Let's revise the AI model. Let's have a look at that. We just go back a bit. We've gone in advance too far. But no, I think it will solve a huge amount of, like I said, it's so things like that. Drug discovery, like you say, from preclinical to phase 3 can take 5 to 10 years, more close to 10 years. And the amount of time and money it costs. Now, if AI can sort that out or reduce that in some way, in a safe way, because that's the main thing, then I think it will.
This is where we're going.
Emmy says, I love all Atlantic Lithium. I have a lot of conviction on this as a long-term play, a lot of progress, and majorly de-risked. 2 years' time, this will be flying, no Chinese involvement, shipping port, 100 kilometers away, etc. No, I agree with you.
Lots of good things.
They've got to literally, they almost very little funding to go, haven't they? They've got the biggest partners funded. Yeah. They got the government themselves funding it. Lots of things going on there. It's very good. Lemon Physical says, if Persimmon have improved, I dread to think what they were like. We bought one in Feb 2021. Nightmare. I'm sorry to hear that. I shouldn't laugh. But what has been the problem with it now? Because they do suggest that they're trying to get up to speed with customer satisfaction. The main house builders will be forced into building low-cost social housing. This will give them steady income true from the government. Maybe
I think that's true to a large extent. We've already seen Vistry has sort of broken ranks with the rest of the industry to pursue a partnership model. When I say partnership, I mean it'll be working with local authorities, housing associations to deliver affordable housing. The analysts didn't like it one bit. It does feel like it's sort of a not as profitable approach as the one that house builders have benefited from for many years. But I think it's the right thing to do. I think getting ahead of the curve there. For me, I would look at Vistry because I think that is where a lot of this is going to have to go. And let's just watch how they get on and see if they can get it right. I think having the jump on the rest of the industry will help them a great deal.
Yeah. Well, I mean, Gleeson is close to that. They build. I think they champion the most affordable housing for private purchases, and their cost of houses are lower than any other house builder. Vistry, there again, it's very similar. I mean, it's a bit more volatile than Taylor Wimpey. Like I said, the low was back in October last year, and it's been bouncing up. A couple of charts worth looking at, right? This is the S&P. It's rallied it. It's down almost 10% from its high S&P because biggest indices in the world ruled largely by the Magnificent Seven. But look at this level here, Johnny boy. Look at that. Look at that. See that support there? It's broken that. It rallied up there, and now it's down below that at 4,200 level, which is quite a key level. And even yesterday's rally, which is quite large, 1.2%, didn't get above that support level. If it doesn't do that, we're rolling over. I think we are rolling over. I think
geopolitics. It's geopolitics. I think that is a very dark shadow that's being cast over the markets at the moment.
A couple of other interesting stocks. GGP, Greatland Gold, of course, hugely followed company because it went up like 2,400% in 2 years, a few years back. I said, be wary of downtrends. This may be exiting a downtrend. What's now? Probably look at this. Gold price is going up. Trend line coming down. It's punched up this previous support. If it gets above 9 pence, I think this is good to go.
Have a look at have you got any other gold miner charts there? I want to see if they're doing the same thing. Because remember, we spoke about this the other day. You do have, having been hit with the double whammy of massively high inflation.
You can see a bit of resistance support there, but it's not really getting above that. It's on that. But I mean, I think there's more HeiQ potential in GGP. I mean, I'm not. There's a couple of other charts I want to look at. It was quite interesting because I saw a movement on them. Bear with me. Oh yeah,
I just think just on gold. I do think the gold miners, having had a torrid time with in the face of rising production costs, and now in a much better place. I think they could start to deliver some decent numbers this year. Producers.
Have you noticed gas recently? I looked at the gas chart, right? Literally, if you want to do a trade. Every year, but November, gas goes up. The price of gas goes up, natural gas. I went back and looked at it. This is Prospex Oil and Gas. Look at that. Prospex Energy, sorry. It hit this level of 7 pence a couple of times. It's really now trying to break that. If it breaks that, it'll be quite bullish there. Another one as well, people like, is Warpaint 1.7L. Hang on. Warpaint, look at this. This is an instant chart. This
nice company.
A cracking performer. Yeah, look at that. So you can see the eye of those. But recently, it's had a high here, and it's broken down, and obviously support here. But it's getting above that. Look at that. It's now getting above that sort of previous resistance. If we can get above those highs again, it's back into another trend. But we'll see. If it's not, it's a lower high. So it needs to get above those previous highs there.
Up a fair old chunk today. It's up 5% today. I wonder why that is. There's no real...
Yeah.
There's no news. I'll tell you what we did have today was brand architects, which on the homepage, which are another sort of, they call themselves a challenger brand in Skinny Tan. Yeah, Skinny Tan.
When that first came out, that was acquired by them actually. Skinny Tan used to be listed on his own. I interviewed the guy several times. It's acquired by them, and I just thought, who wouldn't want Skinny Tan? Who wouldn't want to be tanned and skinny? It's like the perfect.
I don't really understand what it is. Is it some kind of fake tan that makes you look thinner?
I don't know. It's just it sucks you in. I don't know how it does it. Does it reduce cellulite or something? I don't know how it does it. But 7 million market cap. then their final results out. So what's the thoughts here? 40 brand reach. Oh, 49% growth. I thought 49%. Where's the financial?
Because sales are up 41%.
Oh yeah, 41%.
Some of that is driven by acquisitions, but you've got a 7% underlying increase there. Gross profit margins are up. The Skinny Town business.
They're quite in Overdome. That's it. IDP. They own Skinny Town. That was a big seller there for them.
Yeah.
And gross margin. Yeah.
Lots of cash. Decent amount of cash in the bank. So no real concerns there.
Look at that. That literally, they got 8.2 million of cash.
Yeah.
And they've only lost, and they reduced their loss from 1.2 to 6.
That's an operating loss, bear in mind. So the headline pre-tax loss is much, much higher. But that's because they've actually written down sort of carrying value of the Immunoderm acquisition. I think wrote down by about 3.5 million. So that's a non-cash item in the pre-tax loss there. So this is moving towards profitability.
Yeah,
makeup and beauty are resilient. They're very resilient.
Let's put an alert here, because I think that if it gets above that, 30 pence on brand or bars ticker there. And just sit back and wait.
Yeah.
Okay.
Yeah. Really nice. Yeah. Lots of product development on the way as well. So, and the cash to make it happen. So they call it. There's this thing they call it the lipstick effect. When times are tough, people obviously cut back on a lot of spending, particularly on large ticket items. But lipsticks are cheap and feel good. Yeah. So makeup sales will tend to be more resilient in a recession.
Yeah. Okay. Well, when we get into recession, John, I want to see
a
full face of makeup. In fact, that would be the recession indicator. The more makeup John has on, the deeper into recession we're going. Because keep the brave face to look at.
Huge chest as well, but I think the makeup market is a bit bigger than it used to be as well. Because geezers wear makeup too. Geezers wear makeup too these days.
Oh yeah, they do. Yeah. Come on, lads. You don't need that. Okay.
Instagram generation.
It's a bit of good news. UK shop price inflation lowest since August 2022. Inflation dropped to 5.2% from 6.2%. It's going in the right direction, But this is also a bit worrying. I've seen this 14 million UK adults now buy now, pay later. The FTA. Now, a lot of this is interest free, but they're saying those who use it more. So you're talking about 14 million people. That's 27% of the UK adults buy now, pay later. PayPal and Klarna are the biggest operators, but those who use it more than 10 times in the last 12 months were more likely, or twice as likely, to also have a high cost of credit products. So they got bad credit, profiles. So that's quite worrying. It's gone up massively. People are saying they're putting off payments, and the people are using it lots. Literally, struggling. So that's another signal for the Bank of England to stop ratcheting up rates. You're hurting people. So KVU sitting in your ivory towers and saying, don't give out pay increases when you're on 800 grand a year. There are people struggling. Stop messing around with the interest rates. Bring them down.
Yeah. I mean, we do have a bit of a shopping habit as well. I mean, people might arguably not buy things they don't need on credit might be a solution as well. But
but what's I believe that. My wife said that was tact at Christmas. Literally, she goes way overboard. We argue every Christmas, and we end up not speaking to each other Christmas Day, which is nice actually. Okay, and last one, bungalow for me, but 3/4 story townhouses are where it's going. Phil, sum up. Any words on Oncommune? Didn't they buy something for a bill? I don't know.
We looked at it a while back. I haven't looked at it. Technology Minerals. It was on my list. I know I was supposed to look at it. I had been researching it this morning, and I hadn't had a chance to look at the numbers. So I'll come back to that tomorrow.
All right, that's it. We've gone on too long. Thank you very much, everyone, for that. Don't forget, subscribe, hit that like button if you could, and download the Vox Markets app for RNSs straight to your front screen of your phone. Bye-bye. Speak tomorrow.